Hey, it's Dan Moralez, and this is Homebuyer Radio, episode number 65. Hey, this week what I want to talk about is some recent trends that we're seeing in regards to conventional mortgages with a smaller down payment. And what I mean by a smaller down payment is, if you're doing something that is, probably 3 to 5% down, that's a smaller down payment. One of the things that we're seeing happen now is we're seeing PMI companies. Now, keep in mind, PMI insurance, or what we call private mortgage insurance, is insurance that the lender requires when your down payment is less than 20% and you're doing a conventional mortgage. Now, again, there's episodes that go into more detail talking about private mortgage insurance that are back there in the catalog of different episodes that we've done. But what private mortgage insurance does is it allows you to buy a house less than 20% down. What we're seeing happen with some of the PMI companies is we are seeing some of them start to tighten up in regards to what they'll allow for a credit score and debt-to-income ratio. So if you have a smaller down payment, a lot of those PMI companies are starting to require a credit score of at least 700 if you have a debt-to-income ratio over 45%. Now, that's a lot of mortgage gibberish, right? But what that basically means is that if you have a little more marginal credit score and you have a higher level of debt and a smaller down payment, you may have some difficulty being able to get approved for a conventional mortgage. Now, as of right now, FHA and VA and some of the government programs haven't taken that same if you will, course of action. And I don't think it's likely that they will because those are government programs that are meant to help, everybody kind of across the board, right? Where conventional programs, in particular, conventional programs with a smaller down payment, those are insured by a private mortgage insurance company. Those companies can kind of make their own guidelines and they can, assess risk for what they think it is. And they may choose to pull out of different parts of the market if they feel that there's too much risk that's out there for those parts of the market. And that's something that we're seeing, right? This is relatively recent that we've seen it with some of the PMI companies. Not all of them have done that yet, right? So I'm not saying that you can't get a mortgage with a smaller down payment, a credit score of less than 700, and a debt-to-income ratio over 45, because you can. We're still seeing those loans get approved even as, I record this podcast. But that could get tougher, right? So, again, one more reason that if you're sitting on the sidelines, one more reason to get moving and jump into the housing market while the opportunity is still good. Because if you can't get mortgage insurance, that may limit some of your program options, which could put you at potentially a competitive disadvantage, right? Because oftentimes in the marketplace, a FHA buyer is considered to be a buyer that has higher risk than somebody who is a conventional buyer. Okay. My name is Dan Moralez. My NMLS number is 709729. Northpointe Bank is an equal housing lender. You can reach me at 616-931-4629. That's my phone number. You can find me on the web at danmoralez.com. That's DANMORALEZ.com. We do lend in the majority of the 50 states. So if you are looking to buy a house, we would love to help you with your mortgage and your purchase of a new property. Feel free to reach out to us if we can answer any questions or concerns you may have. Again, this is Dan Moralez, and this is Homebuyer Radio.